So before buying an asset, whether planning to hold it for short term, mid term, long term, make sure to always look at the charts first and have a logic, no emotion approach so you can minimize your loss while maximizing gains with the ups and downs of the markets. Step 1. Find out the sector market cap of the asset you plan to invest or trade to determine its risk factor. For instance, micro, small market cap assets tend to be the most riskiest with the highest potential for growth during bull market cycles. The market has generally been going up, which can last on average 1 to 2 years. Otherwise, they're the most vulnerable to drop in value a lot during a bear market cycle. When the market is on a downtrend for several months, up to a year or more on average, which is why it is important to know the market cap and sector of an asset before you put your hard-earned money in. Step 2. Dollar cost averaging will help you minimize losses while maximizing gains by simply setting your stop loss, take profit in every trade investment. In an all-out panic, sell-off, or greed, FOMO, you're missing out. Prices of either stocks, risk on, or commodities, risk off, can ridiculously go up or down, which breeds opportunity for us investors or traders to either go long or short with our positions, assuming we back it up with technical analysis, of course. Step 3. Now that we have done a little bit of research on the asset market cap sector, let's talk about how to do some technical analysis. In technical analysis, you must identify the long-term levels first. The long-term levels are always going to be the most relevant in terms of major support where price bounce or major resistance for a price pullback. On top of that, at a fib drawing, then you have a multi-factor level, which increases your probability of success. You can also look at the RSI and volume for potential tops or bottom on the higher time frames, such as 1 month, 1 week, 1 day, mid-term, long-term, since they are most relevant than short-term time frames. 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, and 1 minute, intraday or short-term. But you are always welcome to look at shorter-term and identify minor levels to trade intraday. But remember, when price goes nuts, then you may have to zoom out a bit to see where price could go next. Sentiment is another key factor for determining near, mid, long-term bottoms or tops. You use the VIX. The VIX is currently at greed levels, meaning be cautious. But when it is higher, that means most people don't want to buy, meaning it's the best time to be greedy, but still dollar cost average. I have provided some of the links in the description down below. If you want to take a look, your crypto and your stock market fear and greed index. Let's take a look at some samples. Use some of the magnificent 8 stocks or 7 stocks. Here we'll do our technical analysis ahead of time for some of these stocks with various market cap and sectors. I'm only going to choose assets that are considered mega caps, or more specifically the magnificent 7 stocks and assets that are less prone to big price drops during a bear market due to the fact that their market cap is so big that it will take a lot more money for the asset price to go down by a lot in terms of percentage. Also, whether you're trading or investing, I've learned the hard way in over 4 years of my trading experience that sometimes it's not about earning more, but preserving and protecting your capital while trying to minimize risk by losing less from set stop loss and making more with set take profit based on the levels you've identified on top of the other factors that will solidify your thesis, making odds go in your favor. 70 to 80% success rate, which will require 100% of our patience and discipline. Step 4. Basically, time and economic news or reports or other black swan events can be your catalyst for big price movements, which can help us determine whether to buy, go long, or sell, go short. Back that up with technical analysis, setting stop loss, take profit, dollar cost averaging, risk management, while staying diversified by having mostly risk off, mega caps, risk on assets, and lots of side cash, in case you get another long or short opportunity. Know when to take profits off your short-term, mid-term, long-term assets, then go on with the next investment or trade after your profit target or stop loss has been reached. The goal is to minimize risk by staying diversified and minimize loss while maximizing gains with the help of technical analysis and the logic, no emotion approach. Step 5. Now that we have identified multi-factor levels, withdrawing, RSI, volume included, and market sentiment in the near term, mid-term, and long term. Have set our stop loss and take profit levels, keeping our portfolio diversified with risk on stocks in various sectors and with various market caps. Feel free to do your own research on how much market cap a micro, small, mid, high, and mega cap have, or risk off commodities while dollar cost averaging. Now, what is left for us to do is to see if there's any time count up for 7 days, 7 weeks, or 7 months or more, or pattern. Bear flag, bull flag, head and shoulders, inverse head and shoulders, going on with the asset. And if there is, then you should pay close attention to it, especially if it's hitting your technical level to determine whether to go long or short. Hope this helps. Like, follow, comment, and share for more.